So everyone that doesn't know me, my name's Alex Wilson. I'm owner and broker of record of Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 12 years. Number one, well, Niesh, I got to update these numbers.
You do, you
Yes,
do.
this is the one that Kyle updated. That's why. But currently number one agent in Canada for the most transactions, and number 11 worldwide. Inducted into the Remax Hall of Fame, awarded the Remax Lifetime Achievement Award of 35, and awarded the Remax Circle Legends Award. But most importantly, it's investing in it. So I've turned a $39,000 deposit, my initial investment of 2012, into now it's a $17 million real estate portfolio, which includes 14 condos, a high park triplex, and an apartment building in Hamilton. And speaking of that, that's everything right here. So I like showing this at the beginning because it gives people an idea of the power real estate investing can do over time. So this is the current market value of my portfolio, $17 million. Now, of course, I have mortgages on all of these properties. But the beauty is in 30 years, all these properties will be paid off, and it'll be paid off by tenants living in the properties. So in 30 years, at a compounded annual interest rate of a conservative 3%, this portfolio would be worth $42 million. And this gets you in the mindset of holding real estate over a finite period of time. We only have so much time, and there's only so much real estate in the world, so it's a finite asset. You can really build significant wealth when you hold real estate over a long-term period. Kyle, who's not on it today, Kyle's one of our business partners. He's also built a multi-million-dollar portfolio. Here's his portfolio right here, current market value, 4.4 million. 30 years, be worth nearly $11 million. And then Mr. Niesh himself. Niesh, why don't you introduce yourself?
Yeah, good evening, everyone. So I've been a licensed realtor for just over 2 years now. I've worked with Alex for the majority of that time. I came from a corporate background, transitioned into real estate before things kind of went sideways with the world with COVID. And I've been working the Calgary market with Alex, Kyle, and other members of the Wealth Builders team now for 2 years. And just like Alex, we're seeing what's happening out there. We're going to be talking about that in the near future. And Alex, when you flip over to my next slide, I think I can talk a bit about the portfolio. So I started off with a condo, almost 20 years ago now when I look at the years, just as a principal residence. But as I start to understand a bit more about real estate and the value that real estate can provide you down the road, especially with the buy and hold principle that Alex mentioned, it was time for me to expand a little bit, which was really, really important. And quick side note on my transition to real estate, working in an environment that was impacted, an industry that was impacted by COVID significantly, where the company that I was with for 20 years had to claim bankruptcy. And, everything that people that worked there for 20, 25 years was owed in terms of a severance or anything along those lines, no one got it. So, as Alex alluded to earlier, building your portfolio to create your own pension fund was really relevant when I started in this game. So, as you'll notice, I was able to scale my portfolio pretty quickly since 2021. And I do have a financial interest with other family members, hence the little asterisk beside some of these units. But my portfolio today is worth just over $4.5 million. And again, with a very conservative 3% year over year annualized appreciation, just under 10 million. And that's, in purchasing power. So there you have it.
Yeah. And again, in 30 years, all those are paid off. And what's great, I'm going to go back to that. And what's great about that in 30 years with this being paid off, and if we provide a conservative rate of return on that, if you put a rate of return of 5%, that each year, that in 30 years, you're paying yourself 5% of that value. 5% of $10 million is $500,000 a year. So you can pay yourself $500,000 a year. That's the concept of building your own pension fund. And we invest in Calgary and we promote Calgary. And in 2022, we've helped over 30 and 350 people from across Canada invest in Calgary. And our team has invested personally in over 10 Calgary pre-construction units. So that idea of building your own pension fund, keeping your home in retirement. I was reading, if you look in the Toronto Star today, there's an article in the Toronto Star today about elderly people that are economically fragile. And the numbers were 13.9% and men and 21% of elderly women. So 39.9% of elderly men and 21% of elderly women are living in poverty. Can you believe that in Canada? Because they didn't prepare properly for their elderly years. And the article on the Toronto Star was literally reading it tonight while I was bathing my kids. And we're talking about an 80-year-old woman. She sold her home in Hamilton a number of years ago, is renting. She's in the basement apartment, paying $1,400 a month in the High Park neighborhood in Toronto. She can't even afford that. She doesn't know what she's going to do. But if you make decisions now for your future self, you will never, ever, ever be in that situation. The issue is when you get older, you can't do things. You can't just go make more money, right? Niesh, when his former corporate company went bankrupt, it's okay. Niesh could go make more money. It's good. He was still young. He's still in his working years. He's okay, right? He could recover from that. But if you have that happen when you're in your 70s or in your 80s, if the company you work for goes bankrupt, your pension isn't protected. Even if you had a pension, your pension isn't protected with that company, and that pension can disappear. Then what are you going to do? Be a greeter at Walmart? That's still not even going to cover your rental costs. And what if you sold your home? For example, this woman sold her home. What if you made the right investments, keeping your home now, and having multiple properties, so leveraging existing equity in your home now to fund your retirement? So a lot of the stuff that I bought, and I know Niesh has bought, use a home equity line of credit off your existing property, tapping into that equity that you have now, and then using the properties to pay down that home equity line of credit. And this is I love this line, and I ran the math. Each $350,000 condo represents $24,000 of annual income in your retirement years. And what I mean, $350,000 condo, $24,000 that adjusted for inflation is in today's purchasing power. So you would have the equivalent of a $24,000 if you bought a $350,000 condo. You have the equivalent of $24,000 with the purchasing power in 30 years in your retirement years. $24,000 today's purchasing power. And that's massive. And no one's taking that condo away from you. That condo is guaranteed. So I broke this down into $1 million, $2 million, $3 million portfolios, because you may think like, oh, $10 million, as we're showing with Nish's numbers and mine 17, like I can't achieve that. So let's look what the numbers are in bite-sized numbers. So if you had $1 million portfolio, which again, $1 million portfolio could be $350,000 condos, 3 Calgary condos, right? So the value of those in 30 years would be so your $1 million portfolio today, inflation adjusted in 30 years would be 1.4 million. 5% annual return on that, you can pay yourself $70,000 a year. And again, today's purchasing power. Just these baby steps. If you make those moves today, in 30 years, you're going to be taken care of. So our Calgary investment opportunity. So going into this part first, because a lot of people they come onto our webinars and they've heard why buy Calgary a lot. So we're going to talk quickly about our current investment opportunity, and then I'm going to get into why Calgary is great. So Hazelwood just sold out, and we've just launched Horizon, which is the exact same. It's a sister building to Hazelwood. So Hazelwood and Horizon, the same stuff. 1 bedroom starting at $299, 2 bedroom bath, $329, 2 bedroom dense, $349, 3 bedrooms, $389, and an amazing deposit structure of $10,000 now, and 30 days balance of 5%, and 365 days, bringing it to 2.5, putting another 2.5, and then 540 days, put another 2.5%. You get a free parking spot with the units, and you get a 2-year rental guarantee when the property is completed as well in 2027. So they're closing in 2027. So you're able to secure an investment opportunity with as little as $30,000 over 540 days, and then closing on those in the future, which at that point you could come up with 20% to get the mortgage because investment property, with a guaranteed rent on those.
And Alex, one quick addition there. The smaller units, the 1 bed, 1 bath, 2 bed, 1 bath, right now, the promotion that they're offering is 5% down on the smaller ones.
Correct on those smaller ones. Though we don't have any. those are all gone. But we do have some 5% down opportunities in downtown Calgary. They're just a little more. They'd be in the mid 500s because they are downtown. We have 2 bedrooms in downtown Calgary with parking for the mid 500s, and with 5% down on those, you could get in for $25,000 to $30,000 in downtown Calgary. So we do have those, and those also close in 2027. I think they come with 2-year rental guarantees. Here, Niesh, I'll have you talk a little bit because you own so much in this area. Why don't you talk about this neighborhood and what's coming in the Horizon Hazelwood community?
Yeah, absolutely. So for those that aren't too familiar with Calgary, it's divided into 4 quadrants. So you have the northeast, the northwest, southeast, southwest, so on and so forth. So this particular project is in Calgary's northeast quadrant, which is the fastest growing quadrant in Calgary. So that speaks to the property value and the appreciation that you will be able to appreciate, pun intended, down the road. Now, the community of Belvedere / Huxley is already an established area. So what we mean by that is you don't have to wait a year or 2 years after you take possession of your property for the amenities and the conveniences to open up. They're already there. And you'll notice here on the slide, there are facilities in place to help families, growing families, those that are active. There's bike paths. There's, a lot of green space that you can also entertain your family and just, enjoy yourself. You are 20 minutes from downtown Calgary. Like, that's very, very important when we talk about travel times. And that's a legitimate 20 minutes. You don't have to leave at God knows what time in the morning to get to the offices downtown. And when you're talking about having people coming in from outside of the city, you're only 18 minutes to the airport. And this is a international airport, one of 4 airports in Canada that's actually international. Shopping malls are just a few minutes away by walking distance. If you go to the east, you're in Chestermere. There's a beautiful lake there. It's a recreational lake, so you can boat, you can swim, you can do all these things in the summertime or when the weather will allow you to do so. And other types of transportation, there's the rapid bus route that's just within walking distance of this particular build site. And that will take you 45 minutes to get to downtown on the bus, 2 minutes from essentially where you are. So it is a growing area. We're expecting the population to grow, by over 60,000 people. There's going to be a ton of new jobs. Just under 10,000 new jobs are coming into that area. And really, it is, in my opinion, one of the best places you can buy low and see the highest return possible down the road.
So to give you an idea of the floor plans, the efficient floor plan. So this is the 2-bedroom, 2-bath condo. So no wasted space. You go right into your kitchen, dining area, living space, windows in both bedrooms, 2 washrooms. That's your A model. Your B model, again, here going into your kitchen space, your living room, one washroom in this one. So window in the master bedroom. Your C model, one of the most popular models. This is 3 bedrooms with windows in each bedroom. Again, flowing right into the unit. Kitchen dining space, good size dining area, living area with a very, very large, generous balcony. And then
Some would
flowing.
call that a terrace, Alex. Over 200 square feet.
Yeah,
It's a
yeah,
pretty large
right.
balcony.
Yeah, it's a huge space. Then getting into the small one bedroom layouts here, and then the another one bedroom layouts here. The majority of the building is A and C model units, being those larger 2 bedroom, 2 bath, and 3 bedroom, 2 bath units. There aren't too many 1 bedrooms in the building. It's predominantly focused on the 2 bedroom, 2 bath, and 3 bedrooms, 2 bathroom units. As Niesh was saying, this area, it's the highest growth area in Calgary. Hazelwood is on the border of Northeast and East Calgary, the two best performing areas of Calgary as of December 2022 for increases in real estate values. And one of the things I'm most excited about the East is a huge manufacturing facility that's being built out in that area. De Havilland is an aircraft manufacturer based in Toronto, and they're closing their facilities here, relocating the entire facilities to just east of Calgary. And this community will be the closest community in Calgary to these facilities. It's going to be about a 20-minute drive away. Massive facility, 1,500 new jobs, where they're putting in the full aerospace manufacturing center, new head office, training facilities, all of it moving out of Toronto, relocating out of Toronto and into Calgary. Why the word relocating is the most important part of this is that means all those jobs there will go from 1,500 jobs in Toronto to 0, and those 1,500 jobs will go to Calgary. But guess what? That means that the workers that currently work there will have to move from Toronto to Calgary. So it's not new jobs, it's new jobs being created from Calgary, but we're also the people that work with the company, they need to move there as well. So all those people are going to need homes in Calgary when they relocate to Calgary. And this is the closest community in Calgary because this area is literally on the border between it's the end of Calgary in the east, and then you go into the small community of Chestermere, which we've been promoting Chestermere for a while, which is another city over a small city, about 26,000 people. This is the closest community in Calgary that you can live in to the new de Havilland aircraft manufacturing facility. And the types of planes that they make are bush planes, the water bombers for forest fires, those kind of things. So high in demand aircraft, worker planes, let's call them, that do the hard work, that do the heavy lifting out there, that are very, very much in demand. And again, they're closing the facilities in Toronto. That's done. They're releasing Bombardier land. That land's been sold to a developer. They literally gone, and they're building a facility right now as we speak in Calgary, and they're going to be relocating 1,500 jobs to the city, not the city, just outside of Calgary. This is the closest community. So very, very bullish on the east side of Calgary because I know that this brand new facility is being built and all those people need somewhere to live. So there we go, just showing an idea where the field are. So it's nearly 1,500 acres of land, a business park, manufacturing plant, maintenance facility, training academy, museum, firefighting academy. Closest community, as I said, to de Havilland. So this shows you where the new future home de Havilland is. So 23-minute drive. There we go to that facility. Closest community. You can't get closer in Calgary. We're at the border. So that talks about the Horizon development that we had. So that was Hazelwood, but Horizon that sold out. Horizon's the new launch of towers that we have. We also have other products as well. We have detached home, semi-detached home, condos in downtown Calgary. All those details will be emailed out to you at the end of this presentation. The presentation is being recorded, so you get information on all our different promotions on different product. But now we'll get into the why we're so bullish on Calgary part of the presentation. Now, we've been investing in Calgary since 2019. And when I first started looking at Calgary, I'm like, I was attracted to the price point. So then I started doing my research. Well, what's Calgary about? I live in Toronto. What about this space? And found some interesting stuff. So it's the most livable city in North America. fourth most livable city in the world. Top 5 of the Economist Intelligence Unit's Global Livability Index, located in the foothills of the Canadian Rockies, loads of green space, and second lowest cost of living in Canadian cities, and 9th lowest in North America. And that point there, I really want you to hone in on as we deal with affordability issues. Calgary is not unaffordable. Where we live, Toronto is unaffordable. Vancouver is unaffordable. Calgary is not unaffordable. I'm going to get into it later, but just the taxes here are absolutely crazy. When I talk to people about, I connect with realtors from across Canada, and I talk about double land transfer tax. And like, what's double land transfer tax? And I talk about development charge. I'm like, what's development charges? I'll talk about it in future slides, but Calgary is such a pro-investment. Calgary and Alberta are such a pro-investment environment. It's incredibly attractive to us real estate investors, and that affordability is incredible. And this is relevant in anyone that lives in Toronto. I swear the sun did not. There was no sun in January. Niesh, do you think the sun came out in January? Because I don't. I swear every day in January was cloudy, and it felt like that in December too. Which isn't normal for Toronto, maybe for Vancouver, but there wasn't any snow in January, which was nice, but there wasn't any sun either. Calgary has sun. It's the sunniest city in Canada with an average of 2,300 sun-filled hours, extensive outdoor path network for biking, and ranked the second for healthiest lifestyles in Canada. So not only is it an affordable city, it's a healthy city too, with lots of sun. And then just outside of Calgary, you have the Rocky Mountains with 5 world-class ski resorts within 2 hours, over 200 hiking trails in Banff National Park, and it's only an hour and a half drive. And if I said let's go to Muskoka, so in Toronto we have Muskoka north of us, and I said it's a 2-hour drive north. Yeah, it's 2 hours if I leave at 3 a.m, because otherwise everyone from the GTA is piling on in traffic, and traffic's horrendous, and it'll take me 4 hours to get there if I go at prime time. But there it's a true 1.5 hours just to get to the world-class Rocky Mountains. So why are Alex, Kyle, and Niesh investing in Calgary? So again, these are things that I found out when I first started looking at Calgary. It's affordable. I have a great healthy lifestyle. Obviously at the foothills of the Rockies. Okay, these things sound good, but what about the numbers? What's happening in the city of Calgary? So population growth. We are in the business of investing in roofs over heads. So if we're investing in roofs over heads, we want to make sure that the population in that area is growing. Well, that population growth in Calgary has been positive for the past 3 years. Also, people in Calgary have money. So not only is it affordable, but the people there make money too. Calgary has the highest millionaires per capita of all major Canadian cities, and Calgary represented the highest wages and salaries per employee in the country at 66,000 in 2018. So it's affordable and people have money there, and the population is growing, and it is growing. It's set to grow by Alberta's set to grow by 48%. It will be larger than BC by 2043 over the next 2 decades. And plus, it's going to grow at double the rate of Ontario. So Ontario is going to grow by 24%, but Alberta is going to grow by an astonishing 48%. And when you look at Calgary, it's going to grow even faster than that, or even more than that. The population of Calgary will grow by 62.5% over the next 20 years. Calgary is going to go from 1.6 million to 2.6 million people over the next 20 years. It's going to have a population bigger than British Columbia. It's growing twice the rate of Ontario. So if I'm investing in roofs over heads, this is where I want to be, because next 20 years, I'm going to have significant growth in my population, and all those people need somewhere to live. That 1 million people that Calgary is going to go by, they're all going to need somewhere to live. And we're looking at record levels of net migration. So migration meaning people leaving all the other provinces and moving to Alberta. Why? Why are people moving to Alberta? Hey, guess what? It's affordable. And then when we look at Calgary, you have the highest wages in Canada, and you have affordability. So why wouldn't I want to move to Calgary? That's where the jobs are. So it's talking about strong economy. So Calgary's fourth in Canada for economic output. Obviously, Toronto, Montreal, Vancouver are top three. Then we have Calgary, number four. It's not a random city. This is a major city in Canada. The values of real estate are far below the values that they should be when I compare them to Toronto, Montreal, and Vancouver. Calgary has a very, very strong economic footprint. Calgary has the second most number of head offices in Canada after Toronto. And Alberta is going to lead Canada in economic growth. So we're looking at Alberta being the economic leader in growth. So not only are they going to lead in population growth, they're also going to lead in economic growth as well. And there are jobs like crazy. So Alberta has over 100,000 job openings. Thousands of construction jobs are vacant. A significant number of jobs were added in Alberta compared to their population. So they punch above their weight when they're adding jobs. So their percentage of population growth and the percentage of job growth is the largest in Canada as well. So yes, Ontario led in job growth, but it's nearly equal to their percentage of the population, where you see the difference between the percentage of the population in Alberta and the amount of jobs that they grew. And they make money, and as we talk about making money, but they also have significant surpluses that their budgets are running because of the price of oil. So in their most recent budget, they ran a $13 billion surplus. And guess what they're doing? They're putting that money back, and they're paying down their provincial debt. And they already have one of the lowest net financial debts in Canada. And you're going to see that in a future slide where I talk about the net financial debt in Alberta. And what does that mean is that they're in very, very strong financial footing, and they're forecasting surpluses. Unlike other provinces that are forecasting deficits, they're forecasting surpluses moving forward. And that's based on $70 a barrel of oil. And we know that oil has been trading far higher than that very recently. So Alberta, from a financial situation, their provincial coffers are flush with money, and they're using that to pay down their debt levels in their province, which was already one of the lowest net financial debts in Canada. And why are they doing that? Well, guess what? During COVID, you spend money. You spend money during COVID because that was a time of financial need, and now they're paying down those debts during good financial times. And they will also use that money to continue to invest in diversifying their economy, which we'll get into more. And here's my slide right here when I talk about net financial debt. So you look at Alberta. Alberta has one of the lowest net financial debts in Canada, the lowest net financial debt in Canada. And look at Ontario at nearly 19,000 per individual. Niesh is shaking his head. You might have to move one of your investment units out in Calgary and sell your Toronto stuff. And now we're paying down, and we're paying down net financial debt. Rest of Canada over 10,000. Alberta coming well below that. So they're a very strong financial footing to make investments back in their province.
And
yeah, go ahead, Niesh.
Just going back to that slide one more time, Alex, when you have a second. When we mentioned the lack of barriers into buying property out in Alberta, Calgary specifically, not having to pay the land transfer taxes or double land transfer taxes and all those additional costs of purchasing a home that you pay to the government. This is the reason why you don't have to do that in Alberta, because they don't need that type of influx of funds from your everyday citizens that are buying homes to pay down their debt. They're already doing that with their economy and their industry. So this is one of the reasons why it is possible for you to grow your real estate portfolio in a place like Calgary, Alberta, not so much here.
Yeah, go 100%. Like, even for example, so prices went down in the GTA, and there's a number of houses on my street that I live in Toronto that were on for sale. And I was tempted to buy one because I'm bullish on multiplexes in the city. But even just looking at what the prices it came down to, so it was a detached home across the street from mine that went down. That went down to 1.5 million. It needed money put into it. And when I factored in the money I have to put into it, which probably would have been $500,000, and when I looked at my land transfer tax, which on that would have been about $70,000, it still didn't make financial sense. And even though I could have rented the property for about $10,000 per month, it was too big of a risk, even in the down of the market, because even if it went up in value and if it jumped up $100,000 worth of value, I still haven't made any money because of the land transfer tax that I paid on the property, plus any realtor fees that I would have to pay when I dispose of the property. I'm like, this doesn't make any sense. That's where Alberta is so attractive, because they don't have those high transactional costs in the purchase. So buy low, sell high. So again, when we were looking at the values in Calgary in 2019 and even today, condo prices haven't even hit what they were in 2014, which was almost 10 years ago. And there was a crash in oil prices, and that's what led to a huge falling in the value of property and real estate, and specifically condos in Calgary. And there were mass layoffs in the oil and gas industry, and that's when Calgary was predominantly focused on oil and gas for their jobs. And as well, when I look at the distribution of oil in Alberta, that's the main cause of a lot of things. So Alberta is landlocked, and the majority of oil is just sold to the US. But in 2023, 2024, the Trans Mountain Pipeline is going to open up, which is going to increase our international exports by 13% for oil, or increase our exports of oil by 13%, which will go to Vancouver and allow us to hit international markets, which will then allow Alberta oil to trade more closely and avoid the big swings in value that we see when there are drops in oil prices. So the Trans Mountain Pipeline is opening in 2024, and I know that I'm buying near the bottom of the market because real estate prices went down from 2014. They kept on going down, and I haven't even hit the pricing that condos were selling at in 2014. Now, people say to me, Alex, well, what if oil prices crash again? And I say it doesn't matter, because Alberta has diversified their economy. So even if oil prices went down, remember, I was buying condos in Alberta in 2019 before the spike in oil prices. So the spike in oil prices, that's gravy for me, because I wasn't banking on international conflict in Ukraine in 2019. Didn't know that was going to happen. COVID hadn't even happened yet. Didn't know any of that stuff was going to happen. I just saw a buy low opportunity, and I saw diversification in the economy. Now, the rise in oil and gas has put extra money into Alberta's pocket, which is great. And we're going to have we're going to be having the Trans Mountain Pipeline complete as well, which allows us to get to more international markets with our oil. But there hasn't been huge investments in the oil sands. So during this period of time, there hasn't really been new jobs created in the oil and gas market. So when people say, well, what if oil prices crash? It doesn't matter. I can't lay off people that are already laid off. So all those people that got laid off in 2015, 2016, 2017, that led to the crash in real estate prices. Well, those people already found new jobs in different markets in different fields. I can't relay those people off. So there won't be mass, if oil prices go down to $60 a barrel, let's say, for example, it's going to have no impact on the job market in Calgary, because it wasn't like there was new jobs created with the new oil and gas dollars, because there wasn't new investments made in the oil sands north of Calgary. So we've seen diversification away from oil and gas. Oil and gas, you got to look at as the backbone of the economy. That revenue stream will always be there, and that revenue stream may fluctuate up and down. So we always know that income is going to be coming into the province. But if we invest that money correctly and diversify the economy, that's where you really see the benefit of that backbone. And that's where we've seen the tech market. And this is why I invested in Calgary, seeing the tech market really take off in Calgary. Calgary's economic development bullish on city's prospect, annual community report. Calgary's outpaced from a tech workplace standpoint everybody else in North America. And why is that? Well, Calgary is affordable. And especially now with when tech companies are having their budgets tested, and they're looking for cost savings, Calgary is the cost savings market. And Canada is the cost savings market in the tech industry. So Canada itself is a cost savings market because of our dollar value compared to the American dollar. So they're already hiring people on a discount. Plus, they don't have to worry about medical insurance here because we have obviously socialized medicine here in Canada. So there's savings there for the employer, and also there's a savings for the employer because they're paying Canadian dollars versus American dollars. And the office space is significantly lower in Calgary versus other cities in Canada. So office space in Calgary, in Edmonton, it's 23% more. Toronto's double at 102% more, and Vancouver's nearly triple at 155% more. So Calgary, from just the raw office space level, is far more attractive for companies to house their employees. On top of that, it's ranked in global top 10 most attractive cities for workers, highest proportion of STEM graduates of all the major Canadian cities. So the people with the degrees that they need to work in the tech industry, degrees in science, technology, engineering, and mathematics, the highest proportion of those graduates are in the Calgary area. And that's why it's home to 435 technology companies, which 3/4 of them are startups. And those startups are becoming unicorns. So Calgary is home to several companies that have reached the rare billion-dollar valuation mark, the unicorn. So Neo Financial, ShareWorks, which was bought by Morgan Stanley, Benivity, Enverus, Parvis Therapeutics, all these billion-dollar companies that have hit that status in Calgary, these startups that have come full circle and are now actively hiring in Calgary. On top of that, Amazon is opening a new cloud computing hub, and this specifically, this new cloud computing hub is just north of where the Horizon development is. It's just north of the Northeast Quadrant, going where their distribution facilities are. They're building a massive cloud computing hub. It's only the second in Canada. The other one's in Montreal. It's a $4.3 billion investment, going to lead to 900 jobs. They recently opened the new TELUS Tower. TELUS is hiring 8,500 people in Alberta, across Alberta. Calgary obviously will get the majority of those, being the economic and population capital of Canada. It's part of a $17 billion investment in operations in their network in Alberta. And then WestJet is making Calgary its connecting hub within its global network. Multi-billion-dollar investment going into Calgary and its airport, relocating all its 787 Dreamliners to Calgary, 1,000 direct jobs. And this is really relevant. And I've talked about this in previous presentations. So there are only 4 true international airports in Canada: Toronto, Montreal, Vancouver, and Calgary. So much so that during COVID, there were actually only 4 international airports that you could fly internationally into, and that was Toronto, Montreal, Vancouver, and Calgary. And why that's relevant is that if I'm an international company, I want to be able to fly direct to my destination. I don't want to be connecting through a whole bunch of different cities. I don't want to be connecting through Winnipeg to get to Calgary. I don't want to be connecting through Saskatoon to get to Calgary. I want to be flying direct somewhere. You can fly direct to Hawaii from Calgary, for example. So it's a direct hub airport. That's WestJet is making this hub. And I flew to a convention in Las Vegas a few weeks ago, and I look at my Air Canada pricing. I'm like, oh, I should just double check with WestJet, see what the pricing is. Well, guess what? I can't fly direct with WestJet from Toronto to Las Vegas anymore. I have to fly through Calgary because that's their their global hub connecting airport. So you're going to see new companies relocate to Calgary or open up shop in Calgary because I'm affordable and I can get directly to my destinations that I need to via flying.
And WestJet just got approved for their buyout of Sunwing as well. So
Correct.
now
Yes.
they're able to do
Yeah. So they now
vacations.
something as well, which will then continue to make when we talk about a transportation hub, Calgary being a transportation hub of the West. So all those vacations that people are taking, you're going to be flying directly out of Calgary now for those. De Havilland we talked about already, which is just going just east of Horizon, and then it's not just those technology startups I was talking about, and we did talk about Amazon opening in Calgary, but we have some massive international consulting companies. So Infosys is one of the largest consulting IT consulting companies in the world, based out of India. They've opened a new digital center in downtown Calgary, doubling their jobs from 500 to 1,000, with plans to double their workforce 8,000 in Canada by 2024. But these 500 to 1,000 jobs, that's all in Calgary. Emphasis, another massive Indian consulting firm, opening a new delivery center in downtown Calgary, their Canadian head office, 1,000 jobs over 2 years happening right in Calgary. SideTrade, another large company, artificial intelligence powered order to cash platform. We know how big AI is these days, opening a new headquarters in downtown Calgary, leading to 110 jobs. Then IBM most recently opened a new Calgary Innovation Hubs, 250 new jobs at Calgary. RBC opened a new Calgary Innovation Hub, 300 new tech jobs at Calgary. TD opening a Western Canadian wealth hub in downtown Calgary. Didn't we talk about how they have the highest wages and the most millionaires per capita in Canada? Well, why wouldn't I open one? I'd open my Western Wealth Hub in Calgary. Calgary is the highest population of post-secondary educated people in Canada. They're smart out there. They're educated. So we see all these jobs that are opening up in Calgary. Well, Calgary, if you talk to anyone in Calgary and you talk about the real estate market to locals in Calgary, it's still booming out there. It still has runway. It hasn't gone down in value. We'll talk more about that in a second. But also, when I talk about these companies moving to Calgary, open up in Calgary, choosing them over other markets like Toronto or Vancouver or Montreal, I know it's going to continue happening because I've seen it already happen and happening in the States. So it's not speculation. It's modeling that I've seen happen somewhere else. And why have companies left California and started moving to Texas? Well, they're fleeing high taxes. Well, when I look at Alberta has the lowest corporate tax rate in Canada. It also has no provincial sales tax. So they have the lowest taxes in Canada. And we talked about no land transfer tax or development charges if I'm buying real estate or if I'm developing. No extra costs on those. Where in my other markets, I do have significantly extra costs. I do have a provincial sales tax. I do have higher corporate taxes. I do have taxes when I sell land. I do have taxes, development charges that the city charges me. I don't have any of those charges in Alberta. Expensive housing. Remember when I circled, I said like focus on that second lowest cost of living in Canada, 9th lowest cost of living in North America. Well, companies are leaving California because it's too expensive for their employees to live there. So they got to either pay their employees more, their employees are going to have a lower standard of living. Or if I move to a lower cost environment for housing, then they wouldn't have to pay their employees as much, and their employees can have a much better standard of life. Calgary being the same thing. It has the second lowest cost of living in Canada and the 9th lowest cost of living in North America. So it's got affordable housing. So the employees that make $100,000 there can live a decent lifestyle versus you feel like you're living in the poverty line if you're only making $100,000 in Toronto. And then government regulation. So we talked about how the provincial government is running surpluses and they're investing back into their industries. There's no rent control in Alberta. The laws there are for landlords are much more favorable. So if someone stops paying rent in Alberta, guess what? I'll get them out of their property in 2 to 3 weeks. If that's in Ontario, it's 8 to 12 months. So if your tenant stopped paying you today in Ontario and you started working through the landlord and tenant board, it could take 8 to 12 months for you to evict that tenant. 8 to 12 months of getting no rent. In Alberta, 2 to 3 weeks. Let that sink in. How massive is that? And then plus no rent control, fixed term leases. You're not scared about renting to someone because, is that person ever going to leave my property and I'm going to be stuck at this rent for a long time because I have rent controls? You don't have those worries there. If you want to sell your property, you can tell your tenant at the end of the lease, hey, goodbye. Lease is over. Go find somewhere else to live. Thank you very much for paying rent and live in my property. Then you go sell the property, stage it up, make it look nice, sell it vacant. Here, you go to if you have a tenanted property and you try to sell it, well, good luck getting in the property. The tenant's going to let you in the property. You're selling their home. You think they're going to make the place look nice for when prospective buyers go in there? No, they're not, because again, you're selling your home. You're taking their home away from them. You're inconveniencing them when people come to look at the property. And you don't have the ability to say, hey, I'm selling the property. Here's 60 days notice, move out. No, you can't do that. That's not allowed. I can't do that. So very landlord friendly out there.
And just from a real estate standpoint, when we are involved in resale properties, there is a condition that's almost inevitably used whenever there's a tenant in place. You need to provide the buyer of that property with a condition for vacant tenancy. So if that tenant doesn't leave when the home sells, your deal is done. Whereas in Alberta, that they don't even know what that condition is because they don't have to face that, simply because of the landlord and tenant rules being actually fair. It's not, completely on one side on the landlords. We don't want to make it sound like, the tenants are being taken advantage of, but it's fair. It's fair to the owner of the property.
I will tell a personal story. So my last house, I have a triplex in High Park. So my wife and I lived in a triplex in High Park in 2016. 2016. We bought a triplex in High Park. I had no children at the time. And 2 of the units had existing leases on it, so I couldn't do it. There's only 1 unit that I could provide owner-occupied notice to and move into the unit. And the seller of the property provided notice to that tenant. And when we closed on the property, the tenant was to be moved out and we would move into that unit. Tenant didn't move out. So we couldn't move into that unit. And we had already sold our condo. We were already homeless. We were staying at a friend's house. And I remember we were in Ireland scouting out our wedding venue and getting the call saying, yeah, no, the tenant isn't leaving. I closed on the property with the tenant in, had to enlist a paralegal, Elaine Page, amazing. So if anyone has an issue with a tenant in Ontario, put you in touch with her. And it was another 6 weeks until I could get into my unit where I had to pay off the tenant to get her to move out of the unit so that I could move into the house that I owned that was going to need my home. That happened. That happened to me. I know what I'm doing, and that happened to me. So yeah, these things can happen in Ontario. And I chose to close on the property because I still wanted the property. It just was a huge inconvenience and stress having to deal with getting this person out. And that was pre-COVID. So that was pre-COVID in 2016. The landlord and tenant board is far slower and a far bigger mess these days than it was back then. And again, in 2016, my paralegal was able to negotiate that with me. Again, I had to pay someone to leave the property that I owned to move in. I was homeless, not the tenant. I was homeless and couldn't move into my property. And I provided proper, notice was provided. No, I'm not leaving. That's Ontario. Again, these are the worst case scenarios. I have a significant real estate holdings in Ontario. I'm not worried about these things, but these are things that come up in Ontario. You don't worry about any of that in Alberta. So it's a pro-investment environment. No rent control, no foreign buyer tax, no land transfer tax. Okay, so well, the foreign buyer tax isn't relevant anymore because you're not allowed to buy. But there was no foreign buyer tax then in Alberta. No provincial sales tax, no development charges, $10 billion stimulus package, including reducing corporate taxes. They initiated that as soon as COVID hit, and they have the lowest corporate taxes in Canada. So, Niesh, you want to talk more about a little more about the Calgary market, talking about these slides?
Yeah, absolutely. So, when we look at markets, what we have seen over the last 6 to 8 months has been not great in the majority of the major cities in Canada. Now, if you were to take Calgary and you were to apply that as a secondary layer to all these other major cities, you would notice a stark difference. Now, the reasoning for the growth and the positive trajectory in the Calgary market is because of the population increase, right? When more people are coming into the city, there's going to be a larger demand for housing. And when that is happening, home prices are going to go up. When there's lack of rental space or very low rental space, vacancy rates are about 1%, or you might be lower than that right now, your rental rates start to go up. And it's really a formula for investors that make a lot of sense to invest in, simply because you know that what you're investing in is going to generate cash flow and it's going to appreciate over time. Now, looking at these individual slides here, this is Kyle's slides, so I'm just going to get familiar with them. Okay, so simply just talking about the market from 2021 compared to 2022. Of course, there's been a lack of supply on the market because people aren't necessarily ready to put their homes on the market because they just don't know, because if you sell your property, you're going to have to buy another one and there might not be one available for you to buy. So when it comes to listings and sales, of course, that number has gone down, but your prices have gone up. They've gone up, which isn't the case that's happening in other major cities. So it's still a market that is performing much better than its competitors, which are the three other major markets in Canada. And even in the last, couple of months of this year, the trajectory is positive as opposed to other places.
And that's where we've seen when we look at the Calgary market, and this slide just shows you right here, prices have gone up and they've stayed up. They're level, versus other markets where they've gone down 20-30%. We're not seeing any price decrease really in the Calgary market, especially in the product under 500,000. The reason for that is it's already affordable. Prices went down because oil prices dropped in that 2014, 2015, 2016, and they were still recovering from that. So they're still lower fundamentally than where pricing should be. And that's where, even with interest rates where they are today, it's not having an impact on the prices in that market.
And if you look, just quickly slide back one more time, Alex, the last 2 months that are shown here, September and November, and even leading into December, man, you look at other major markets in Toronto, it's a negative, almost 90-degree incline going down in terms of the prices, simply because of all the interest rate hikes that we've been seeing over the last 6 months. And if you look at Calgary, I mean, that's quite positive, and it is quite encouraging. And flipping to the next slide, Alex, you can talk about this one, or I can. I'm happy to do so.
Yeah, and this is a great slide that shows the markets where how much they went up during COVID, and then the pullback that they had. So like if we look at, okay, Oshawa went up in value by, and this is an older slide because this is August 2022, and prices have gone down even more from this point. But you see somewhere where Oshawa went up, let's say 88%, but has then pulled back now 14%. So if you bought in February 2022, you've probably paid that peak price, and now you've pulled back 14%. Versus Calgary, even if you brought to the highest point of the market, you're still getting the same pricing today. So you haven't had the pullback of those prices. And as I said earlier, condos have not hit the record highs of 2014 in that market. And then we're seeing the rental market jump significantly. So they've seen nearly a 30% increase in prices in 1-bedroom, 2-bedroom, and 3-bedroom properties in that market. Vacancy rates are less than 1%, and that's not just in Calgary. That we're witnessing that across Canada, where it's vacancies. But we're seeing huge jumps in the rental numbers in the Calgary market.
And that was for the 2022 fiscal year. In 2023, the first 3 months, we're already up by over 25% compared to where we were last year, which was a record year. So we're seeing the momentum, continue. We don't know. I mean, I'm not hedging on it being in that range. We do our analysis very conservatively, but man, 30%, almost 25% higher than where we were last year which was a record year. It's phenomenal.
Yeah, and you're still gonna see, because we're investing in markets, we're investing in roofs overhead. So we do the analysis where are people moving to. The stats scan, the data that I put for population growth, the stats scan data indicates that Alberta is a province that's going to grow by population. There's only really 3 provinces that are going to grow in population over the next 20 years: British Columbia, Alberta, and Ontario. And of those 3 provinces, Alberta is going to grow by the most. And Calgary is going to grow even faster than the rate in the province of Alberta. So that's where we want to be investing if we're investing in roof overheads. So I'm going to stop the screen share now so you can see our faces more close up. And I'm going to open the floor up to questions, any questions that anyone may have here. Now, again, this has all been recorded. You will get sent a recap email with the recording, and you can rewatch any of this as well. And then you'll have all our investment opportunities listed in Calgary as well. So happy to answer any questions you may have. Just going on to the Q&A, see if there's any questions there.
There were 2 that I believe they were asked directly, so I did answer them, and I'll share them. They're not sensitive in nature now. The first one was specific to some of the layouts that we saw for the Horizon condos. The question was, hey, is the kitchen really going to look like this? Are all these things going to be included? Yes. And this will be included in the packs that we send you. The island is there, the countertops are there. It comes with all the appliances. So everything is included in these units when you purchase it.
Yeah, and then someone's asking about, could you send the information on? Of course, we're going to be sending all the information on. If you want to, just to make sure that if you signed up, you should be getting an email. But if you wanted to send us quickly, Seema, your email, we can send you an email directly right away with all the information on those. You can just send us a quick message in the chat or the Q&A with your email, and we can send that. Make sure those details get to you right away. Any other questions from anyone? Otherwise, again, you're going to be getting all the information on the existing properties. That's kind of that's the update for the not Vancouver market, sorry, not the Calgary market, not the Vancouver market. That's far more expensive, and you'll be cash flow negative. The Calgary market, where you can achieve positive cash flow, unlike Vancouver and Toronto, and we see upside in the values. Oh, we got a new question coming here. Thank you for your email. Niesh will be sending you some more details when we get off the call. So thank you, everyone. You've given us an hour of your time. We really appreciate you all coming on. Again, you'll have a recap email, and you'll have an opportunity to book a call with myself or Niesh or Kyle, and we're happy to answer any questions you may have. Okay, everyone. Thanks so much. Thanks,
everyone.
Bye-bye.
See you soon. Take care. Bye.